In this video, we review Fidelity versus Vanguard. Have you used Fidelity or Vanguard before? What was your experience? Leave your Fidelity or Vanguard review in the comments section below. Fidelity and Vanguard are two titans in the investment world, often compared for their distinct approaches and offerings. Interestingly, Fidelity's customer satisfaction scores frequently surpass Vanguard's, according to J.D. Power surveys, emphasizing its strong service reputation. Meanwhile, Vanguard is credited with creating the first index fund, a revolutionary product that changed investing by offering low-cost, passive portfolio options. Fidelity is tailored to a wide range of investors, from novices to advanced traders. It offers commission-free trading for stocks, ETFs, and certain mutual funds, with unique features like fractional shares and a robust platform called Active Trader Pro for active traders. Its emphasis on accessibility includes no minimum requirements for most accounts, alongside cryptocurrency and options trading. Fidelity's educational resources and modern tools make it a favorite for those seeking a hands-on, tech-driven investing experience. However, its advanced platform can feel overwhelming for beginners, and its index fund selection is somewhat limited compared to Vanguard. Vanguard is celebrated for its investor-first philosophy, offering low-cost index funds and ETFs that cater to long-term, passive investors. Its digital advisor requires a $3,000 minimum but ensures affordable management fees capped at 0.2%. The firm specializes in retirement planning and is ideal for individuals focused on building diversified, cost-efficient portfolios. Vanguard's structure, being client-owned, aligns its interests closely with those of its investors. That said, its trading platform is less sophisticated and lacks certain asset classes like cryptocurrency, limiting appeal for active traders. Both companies excel in fee structures. Fidelity shines with zero fees for trades and low-cost mutual funds, while Vanguard's low expense ratios on its index funds are a hallmark. For advised accounts, Vanguard's personalized service requires higher minimums but is competitive on fees, whereas Fidelity's robo-advisor, Fidelity Go, offers more accessible entry points but higher costs for larger accounts. Fidelity's flexible pricing model appeals to a broader range of users, while Vanguard's simplicity attracts those focused on consistent, long-term growth. When choosing between them, the decision often hinges on investment goals and style. For active trading, Fidelity provides better tools, faster execution, and broader asset options. For passive, goal-oriented investors, Vanguard's low-cost funds and emphasis on retirement planning are more appealing. While Vanguard champions simplicity and investor alignment, Fidelity's innovative features and comprehensive services cater to more dynamic investing needs. In summary, neither is inherently better, as each serves different investor profiles effectively. Vanguard offers a steadier path for those prioritizing cost and simplicity. Fidelity thrives by combining technology and versatility for those seeking more interactive control. Investors must weigh these factors to align with their personal goals and preferences.